Applied Optoelectronics, AAOI, is seeing a powerful resurgence as multiple bullish forces converge at once: fundamental demand, macro relief, and technical momentum. At the core of the move is accelerating hyperscale demand for 800G and emerging 1.6T optical transceivers. AI data centers are rapidly scaling bandwidth to handle increasingly compute heavy workloads, and AAOI has secured meaningful customer orders tied directly to that expansion cycle. These aren't speculative pipeline hopes, these are tangible hyperscale deployments. As customers transition from 400G to 800G and prepare for 1.6T architectures, AAOI's vertically integrated manufacturing model positions it to capture margin leverage if execution holds. To meet this surge, the company has been investing heavily in production capacity and operational scaling. Investors are increasingly interpreting that capital deployment not as risk, but as strategic positioning in the AI infrastructure buildout. That shift in perception is important, especially for a name historically criticized for boom bust cycles. Adding fuel to the rally, analyst price targets have been moving higher, reflecting improved revenue visibility and confidence in AI driven optics demand. With short interest elevated and the stock pressing toward multi year highs, trading forums are openly debating the probability of a squeeze scenario. Rising volume and strong relative strength have intensified that narrative. However, the counterargument remains loud. AAOI has a well known history of volatility, sharp rallies followed by equally sharp retracements. Skeptics warn that past pump and dump cycles in optical names shouldn't be ignored, especially in a sector prone to supply gluts and hyperscaler order lumpiness. Macro catalyst: Supreme Court tariff ruling sparks intraday surge. Momentum dramatically accelerated on February 20th, 2026, after a 6-3 ruling by the Supreme Court of the United States invalidated President Donald Trump's tariffs imposed under the International Emergency Economic Powers Act. The court ruled that the executive branch had exceeded its authority, reaffirming that Congress holds constitutional power over duties and tariffs. The decision, reported mid morning around 11 a.m. ET Friday, 20th February, triggered a broad equity rally. AAOI quickly became one of the session's top gainers, surging roughly 9 to 13% intraday to around $53. For AAOI specifically, the ruling carried direct implications. The company relies heavily on Asian supply chains for components and manufacturing inputs. Tariff relief reduces input cost uncertainty, improves gross margin outlook, and strengthens pricing flexibility. In other words, this wasn't just sympathy momentum, it was margin math. Sector wide optics strength. The ruling amplified already strong sentiment in photonics and AI networking. Peers such as AXTINC plus 25%, Lumentum, and Sienna also rallied as investors doubled down on the AI data center interconnect theme. The optics trade has increasingly become a direct proxy for AI infrastructure spending, and AAOI sits squarely in that narrative thanks to its 800G traction. High trading volume confirmed broad participation: momentum traders, squeeze hunters, and longer term AI infrastructure investors all piling in ahead of the company's February 26th earnings report. Big picture. Right now, AAOI represents a high beta expression of three forces colliding. One, AI driven optical bandwidth expansion, 800G to 1.6T transition. Two, macro relief via tariff invalidation. And three, technical squeeze dynamics into earnings. Bulls see a structurally improved company leveraged to a multi year AI infrastructure cycle. Bears see a historically volatile optical name prone to exaggerated swings and sentiment driven spikes. That tension is exactly why the stock is commanding so much attention.
Okay. Yesterday, the 20th again settled the whole session, the post market session included, with a gain of 9.92%. Quite a high, yeah, quite a big day. 50-day average is around 5.27 million shares. It exchanged 7.9 million. So the stock has been showing a lot of strength within a longer term bullish trend. Its 200-day moving average, which underscores its underlying trend. This one is sloping bullishly upwards. And yesterday marked this is 18. So that was the third straight session of gains for the stock. The extrapolation of it of the 3-day moving average is actually saying that you may actually maintain that strength up till Monday, the 23rd. As a matter of fact, Tuesday just may remain elevated up to Tuesday, the 24th. After that, we are looking at the prospect of a contraction. So all in all, it's just saying that we should expect a consolidation all the way towards the 1st of April. As a matter of fact, it has. If you go back to what has been going on since, let's see now, early February, you can actually say that the stock has actually been consolidating. If you look at it from the 11th of February, you can say, yeah, that if this plays out like that, then you can actually say that the stock has been consolidating since early February. But now we can't say that now. We can't say that now. The stock has been showing a lot of strength within a longer term bullish trend. At various times of late, it picked up a bounce. The 21-day moving average served as a primary demand line. I think it has been doing that. I think we can say that this is the case. This is surely the case. Let's just say on 3 occasions now that the 21-day moving average has served, as a matter of fact, four. It has served as a primary demand line, meaning that each time it closed within one standard deviation of that moving average, above or below momentum. Demand increase. So we have the first one here, 8th of January. Second one is 23rd of January. Third is 5th of February. Fourth is Wednesday. No, no. Yeah, actually, yeah, Wednesday the 18th. Wednesday the 18th. Okay. So actually, it's printed two straight session of gains, not three. Okay. As things stand right now, the momentum, the 10-day moving average. Before we do that, let's see what the projections are saying. We have 52.62, 56.20, and a down projection of 46.83. Previous projections include okay, nothing higher than that. Nothing higher than those projections. Okay, so the 10-day moving average is gaining roughly 67 cents every day. Okay, but volatility is expected to remain modest. As a matter of fact, it's actually pretty much is expected to remain stable, especially from the 21st, 27th of Friday, the 27th, from Monday. So Monday the 2nd of March. We should expect to see some stability, pretty much to some extent. So not it's not expected to be that volatile from after this coming week. Then after this coming week, that is the week that beginning from the 23rd of March. After that week, then some stability is expected in the long term. This is its 200. So this is the 200-day moving average, not the 10-day moving average. 200-day moving average. So overall, not much of what is expected to happen is expected to really affect the 200-day moving average that much. But I think, yeah, to some extent, it will be by far a lot more stable, a lot more stable. Some volatility will definitely affect it, but it's expected to remain a lot more stable. Okay, let's see now. The 10-day moving average. So the 200-day moving average is gaining 67 cents every day, not the 10-day moving average. Okay, so volatility is expected on a 10-day moving average in the short term. So the 10-day moving average represents the short term. So we should expect to see volatility, which is, we can clearly see that expressed here on the with the extrapolation of its 10-day moving average. So the 10-day moving average is gaining $3 every day, and it's in a very strong trend mode. Even the 200-day moving average is trending robustly. Let's see what we have on its 40-day moving average. Okay, yeah, a lot more. Okay, well, volatility anyway is still expected to play out. So I think the trend is for weakness to play out to some extent on the in the medium term. So I think in a very short time we should expect volatility. Very short time. Let's have a look at the 21 day, which is the intermediate term. Let's see. 21 day as we are pretty much, yeah, but a lot more stable, but still expected to remain in place. Okay, yeah, let's just see what we have on its weekly chart. On the weekly charts, let's see what we have. Yeah, extrapolation is saying that we should expect a consolidation from Monday the 23rd up till the 6th of April. Then after that, we are looking at the prospects of a contraction. Okay, here the projections are saying nothing to the upside. We have 37.61, 44.90, 49.41. Yeah. Okay. See what you make of AAOI, and thank you very much for watching this video.